and welcome to the FinTech Magazine Show, brought to you by FinTech Magazine, InsurTech Magazine, and BizClick. I'm Alex Clere, and as always, over the next 30 minutes or so, we'll be bringing you all the latest news, analysis, and opinions from the worlds of FinTech and InsurTech right here on LinkedIn, YouTube, and our other digital platforms. We're joined as usual by FinTech and InsurTech editor Lewis Thompson. Lewis, welcome to the program.
Thank you, Alex, and great to be back again.
It certainly is. Before we start, Lewis, can you give us today's poll?
I can indeed. So at Money 2020 this year, we spoke to WorldPlay head of crypto and Web3, Nabil Manji, who suggested it was in the interest of financial service providers to leverage blockchain technology as a means to store and source data for building better AI tools. So our question for you this month is, will financial service providers leverage blockchain to store and access quality data for building better AI tools? The options are A, yes, data on private ledgers is still very siloed. No, financial service providers won't want to build AI tools from data on public ledgers. Or C, unsure, it depends on the financial service provider in question.
Okay, thank you for that. As always, don't forget to join in with the chat. Say hello in the comments section on LinkedIn, and even better, tell us where you're joining from today. We may even read a selection of those comments later in the show. But first, let's take a look at the latest FinTech and InsurTech news. So we start this month with the latest FinTech news. Lewis, what can you tell us?
Thanks, Alex. Yeah, the news I wanted to really pick up on this month comes from the start of the month when the EU unveiled its revised Payment Service Directive plans, or PSD3 as it's known, in the EU and UK. Now, everyone is aware of how PSD2 laid the groundwork for regulated open banking across Europe and the UK back in 2018. Since then, we've seen third-party data sharing expanding the different types of financial services on offer today, namely embedded finance. It has also paved the way for banking ecosystems to emerge, with banks partnering with fintechs, credit providers, and insurers to promote the products and services of partners. So, with PSD2 being the revolutionary regulation it was, how does the EU hope PSD3 can take things further? Well, under proposed regulations, the EU has set out 6 broad steps or aims for the future. These are the greater combating and mitigation of payment fraud, enhancing the rights of the consumer, providing equal access to payment systems for banking and non-banking bodies, spreading the use of open banking further, improving cash availability at ATMs, and lastly, greater enforcement of these new PSD3 laws. One of the key hopes the EU has for its new broad-ranging suite of updates is an increase in the baseline adoption rates of open banking services and the performance of open banking APIs. EU Commissioner for Financial Services, Financial Stability and Capital Markets Union, Marie McGuinness, said that she hoped PSD3 proposals would not only be a concrete step to modernise the EU's retail payments industry, but the financial service sector as a whole. PSD3 proposals have been met with broad positivity from the industry too. Tink's head of industry and wallets, Jan van Vonno, told FinTech Magazine that he hoped the new laws would support the UK's payment system regulator in resolving some controversies around API quality standards present in the current RTS standards. Now, RTS updates for API have been seen as a necessity for some time now, given an expanding understanding of API functionality when it comes to open banking since PSD2 was first passed back in 2018. CEO of Token.io, Todd Clyde, was equally as pleased with the aims of PSD3 to scale reliable, trustworthy APIs, saying the formalization of a minimum baseline API functionality threshold of banks will help level up the overall performance of the ecosystem. Now, back over to you, Alex, who I think you're going to run us through what's been happening in the world of InsurTech.
I certainly am, yes. So for our InsurTech story this month, I've chosen to highlight what is the largest series funding round for any InsurTech since the beginning of July. It involves computer vision and artificial intelligence, 2 technologies that are transforming the way we think about risk even before it happens. Just yesterday, we reported about a $10 million fundraise for the San Francisco-based firm CompScience, which uses computer vision to identify dangerous behaviors in factories and warehouses and try to avoid the need for workers' compensation insurance claims to arise before losses and injuries even occur. But the main story I want to bring you is this one about Tractable, which uses computer vision to help insurers understand the extent of damage to cars and properties. Now, as we know, the era of digital insurance is defined by automation and self-service. When a policyholder gets into a crash, many insurers allow them to upload photos and videos of the damage to a cloud portal. But how do insurers then process this mass of unstructured data? Well, Tractable's intelligent safety platform analyzes their photos and recommends decisions based on the severity of the damage. The company has announced a $65 million funding round and is seeking to bring dramatic change to the largely manual and time-consuming claims process, which it says has failed to evolve despite the global insurance market's $4.3 trillion potential. According to Tractable, its technology creates a more frictionless claims experience that's up to 10 times faster than traditional methods, in part because the AI is trained on millions of different data points. The latest capital investment was led by SoftBank Vision Fund 2 and also included existing investors like Insight Partners and Georgian. Now, Tractable is no receding wallflower or small startup. It's already an insurtech unicorn, in fact, thanks to a Series D funding round just over 2 years ago that gave it that much coveted billion-dollar valuation. And now, armed with a load more funding, Tractable is hoping to push on to a new level. The company says the latest investment will accelerate its expansion across the auto and property ecosystems to apply AI to cars and homes that need to be repaired, protected, recycled, or sold. One of the investors in Tractable called the company, quote, the forerunners of applying AI computer vision to bring efficiency into the insurance claims management process. And good luck to them for that. Okay, that's our InsurTech news for this month's LinkedIn live show, which brings us neatly to the end of the latest news section. Stick with us though, as after the break we'll be talking to Alistair Brown, VP and Global Head of Banking at software engineering company EPAM. See you after this break.
We've been here for 115 years and we're preparing for the next 115 years. My name is Charles Dries. I am the Chief Experience Officer for F&M Bank. We have banking, mortgage, title, wealth services, big focus on agricultural community, small business and nonprofits. A good split between business and consumer banking, sort of the traditional staples. This next period is really about developing the foundation that we're going to grow from. So we recently renegotiated our core contract. That has freed up some resources. It's added some capability that we'll be installing, like back-end workflow into our operations teams. We've got to make some investments on the IT hardware side of the house, obviously cybersecurity, and then also leveraging the history of the bank from the marketing side, really playing to our core customer and growing the customer base.
Hello, welcome back. Still to come, the results of our LinkedIn poll. You've still got time to vote in that one if you haven't done so already. Just visit our LinkedIn page. But now we have a special guest today, don't we, Lewis?
Yes, that's right, Alex, we do. Today we're going to be talking to EPAM's VP and Global Head of Banking, Alistair Brown, who will be taking us through all things open banking, as well as the growing momentum behind CBDCs. Great to have you with us, Alistair.
Hi, great to be here. Thank you.
Firstly, Alistair, I just wanted to get your take really on what I covered earlier with the new PSD3 proposals. What's your interpretation of the new updates?
So this is a tweak. It's not a revolution. I think somewhere in there on page 5, it talks about the fact that this is a small piece of evolution against the revolutionary background that PSD2 represents. It's an interesting document insofar as we know fraud prevention has become a huge issue, and strong customer authentication, SCA as it's called, has partially solved that and partially got in the way of it being solved, because 2FA, as we call it, so dual authentication, has actually slowed down many transactions and caused lots of friction. And a lot of this solutioning is about a delicate balance between protecting the customer on the one hand, which is obviously highly desirable, but at the same time, speed and efficiency. And the powers that be and the conventional wisdom generally is that they haven't quite got the balance right. So there's a lot of corrective action in there in PSD3, which is fine. But I think you'll see a lot of different behaviour and different fintech activity as a result of that. So it's exciting. It's a good piece of legislation. It's going to run for about 5 years, and then of course we'll all throw our hands up in despair and look for PSD4. And so it will go. The show goes on. The amount of dynamic change out there at the moment is just fascinating. This is bang at the end of July. I talk to fintechs all week, every week. It's been more active this week than many weeks in the Novembers and Februaries of the year. So it's relentless. Change is definitely a fixed feature of our landscape, and I find it very desirable because there are still a lot of things that just aren't right, that we need to get right, that we need to improve. So there's tons to say. Efficiency, transparency. There's now an even greater array of payments instruments out there than ever before. Confusing for the consumer, but they're all developing at different paces in different regions for different reasons. So we've got this hilarious and slightly ambiguous combination of global and local going on across the entire globe.
Yeah, I mean, as you touched upon there, the speed of evolution really in open banking and updates to APIs. In your view, overall, how has open banking really helped reshape the financial landscape as a whole?
That's obviously an enormous question. So given that we don't have 3 weeks on this little piece here, I'll try to have a go at that. So yes, there has been a radical reshaping. Of course there has, but there's much more to come. If you look at the introduction of new technology, it's enabled certain things that were unthinkable even 10 years ago, let alone further back. You look at the introduction of APIs as a technological concept into the game, and it's made all sorts of things possible. But the EPAM is an absolutely outstanding tech firm. So if I look at my API competency center, it's not just a bunch of 3 or 4 guys who've thought about it a bit. It's an entire group. And one of the things we've noticed from about 3, 4, 5 years ago is that APIs have been over elaborated. And it's been, and the consequences of that are greater confusion rather than the solutioning that we were all looking for. So we've gone into a number of tier 1 banks and we've said, okay, look, this is great, lovely stuff, well done, guys, but you only need 12. You don't need 357 of these things. So there's now an optimization and simplification process going on. So that's one thing. So this stuff goes in waves, but it goes at different speeds across different regions as well. And if you look at the uptake of legislation that's originated in Europe, so PSD2, PSD3, the whole notion of it being obligatory for existing bank accounts to open up to third parties of all descriptions. That's not obligatory in other regions outside of Europe. So the fun part is suddenly we've got all this proliferation of new interpretations outside of Europe. Everyone's watching Europe fall over itself, do things well, do things badly. So you've got this antiphonal thing going on between Asia Pacific and Europe, or between North America and Europe. So there's a lot more to come. It's bouncing around with great interest. What I would point to, though, is when it comes to the tech center of all of this stuff, so the Berlin Group APIs that have been effectively mandated by the legislation that came out with PSD2, a lot of it's been ignored, because how do organizations represent difference in their offerings while adhering to a set of fairly specific APIs? The difference is what they're effectively doing is saying, okay, we're not going to do that. That's very interesting, like the rules, but we're going to break the rules. We're going to do it differently. So the Poles are doing it differently, the French are doing it differently. And with all of that, what we end up with is a greater proliferation of difference, which I think is great for competition, but it's very difficult for the bureaucrats to continue their path to some sort of standardization. And if you look at the origins of SEPA, the whole point of SEPA is to standardize across all 27 EU member states, or 28 when they got started a few years back before the Brits left. The fact is, that standardization process is still being honored in the breach. It's being ignored in many cases, as I say. So then if you go outside of Europe, dysfunctional as it would seem to be on that basis, you go to the Americans and it's not mandated at all. They've got their own APIs specifically delineated by FDX, but FDX isn't sponsored by the government, and so on and so on. This is a really complex state of affairs. So as I say, without the 3 days to explain it all, let's try and compress it into that one answer. But we've got a proliferation of interpretation, a proliferation of different solutions, and a lot of very clever people in clever fintechs trying to figure it all out.
Of course, and I suppose amid the muddle of it, one of the sort of key byproducts we've seen from open banking has been embedded finance used across sort of different banking ecosystems. Can you give us your take on how it works and its implications for traditional services?
So embedded finance is quite an interesting version of this whole story insofar as retail organizations with real clout have belatedly realized that one of the opportunities offered by open banking is to take control of their own payment channels and to be much more dominant in doing so. Why is that important? Control, always important, but more importantly than that, they can enhance loyalty to their particular brand by understanding their customer behavior in greater detail. How do they do that? Better data. Where does the data come from? The payment channel. Okay, so what they do is gather all that data together and put it in an intelligent place where the senior decision makers can start to figure out why there's a shortfall. The percentage uplift from doing an embedded finance program within a large shoe manufacturer or shirt manufacturer, whatever it may be, is of the order of 6, 8, 10%. It's significant. It really is. We have a long-running relationship with one of the big retailers in Germany. They're trying to penetrate the Latin American market much more effectively. What we did was look at how e-commerce works for them, enable much more of those channels so that they become closer to omni-channel than ever before. And the result has been a massive uplift. It runs to about $1 million more in just 3 of the countries where we've got started per month. And that's just the beginning, because clearly they'll do all of the other countries as well. But if you look at a Uruguay as distinct from a Germany, guess what? It's a cash culture, and therefore e-commerce doesn't really answer the question. So you have to find clever ways of making that all happen. So it's about enhanced profit. It's about greater loyalty based on better data.
Okay. And Alistair, one of the other topics we're seeing a lot of talk around at the moment is, of course, CBDCs. For you, what are the potential challenges and opportunities for their sort of widespread implementation and adoption, I suppose, on a global scale?
So I had the pleasure of being driven across the eastern Hungarian plain to an obscure town called Oradea in northwestern Romania recently, where there was a gathering of 6 different groups of central bankers trying to figure out exactly what the answer to that question is. We were in a medieval fortress for 2 days trying to sort it all out with the Moldovans, the Croats, the Romanians, the Hungarians, and so on. It's really interesting talking to, as it were, second-tier countries where the requirements are different, the opportunities are very different, as distinct from the Brits and the Americans and the usual tier 1 first world countries. Because the answer to the question is extremely vague. In a sense, this is a hammer looking for a nail. It's wonderfully elaborate. And what we have to do, therefore, is go back to the origins of the thinking. And those origins are that Libra was introduced by a company called Facebook, and the central bankers took fright. And they took fright because the idea of big tech taking over money in any form, obviously, it's a terrifying prospect. It's in the bracket of what could possibly go wrong, like everything. So counteraction is central banks go into a period of consultation and trying to figure out what a digital pound or a digital dollar would look like and what its use would be. It's fascinating because on the one hand, it offers potentially incredible traceability, greater efficiency. The counteraction of that, of course, is that suddenly everybody in government can have a clear idea of what every single transaction is from every individual within a given nation's borders. So this makes George Orwell's 1984 look like a vicar's tea party. It's absolutely terrifying. If you've got an autocratic state taking hold of this and insisting that that's the only channel for money, then they know exactly who's buying what and why, and they can outlaw people. They can forbid them to do things because of what they're buying. The usual categories in the payments world that are difficult, gambling, pornography, etc. As soon as you go there and you throw a light on that, you've got a lot of suspicious stuff running around trying to get out of the limelight. So this becomes problematic at a social level. I think it's absolutely fascinating. I think we've got a long way to go. Technologically, we know how to do this stuff. We know whether it should be blockchain-based, yay or nay. But it's a counteraction to crypto. Crypto obviously decentralized money. Nobody's in charge of it at all. The government does exactly the opposite. It centralizes it. It's completely measurable. It's completely controllable. Are we going to have both? Yes, of course we are, in certain countries. But the Chinese don't like crypto for exactly the reasons I've just outlined. If we look at the spectrum of governmental control and overlay that on top of what's happening to this new stuff, we're into a very interesting debate that's way broader than financial services.
Okay, and as you said earlier, I'm sure we could talk about some of these topics for a lot longer than we've got time for, unfortunately, but we're going to have to cut it there. We appreciate you coming on the show today, Alistair, and sharing your insight with us. Thank you very much.
It's a pleasure. Thank you.
Thanks a lot. So we're going to take a look at what's in the upcoming edition of our FinTech August magazine now. So not long to wait, obviously, until you can feast your eyes upon this one. We're getting close to the end of the month, so hopefully you'll be able to get a copy of this very soon. In the August issue of the magazine, we'll be exploring the broader use cases and applications for blockchain across the financial services industry. Now, it's a technology that's closely linked with crypto assets for obvious reasons, but it can be used for so many other reasons as well. So we explore that. We also explore the gap in access to financial services and ask whether the number of unbanked and underbanked people in the world is growing or declining. With the rising penetration of smartphones, surely financial services should be more accessible than ever before, but are they in reality? And finally, we'll have an interview with John Myers, CEO of IDverse, about the changing need for identity verification services. All that and more in August's issue of FinTech Magazine. Look out for that one on our website next week. Okay, that's our upcoming issue of the magazine sorted. We have some great shows for you coming up later this year too, with FinTech Live London and InsurTech Live, our virtual InsurTech show. Lewis, what can you tell us about this?
Thanks, Alex. Yeah, so InsurTech Live is our new virtual show for all things InsurTech, coming to you over the course of 2 days on the 18th and 19th of October. The ultimate virtual event for every InsurTech leader, InsurTech Live is set to feature a host of innovators paving the way for a more resilient, sustainable, and efficient future. We'll be covering 5 key pillars of discussion at the show, including digital strategies, climate risk, customer engagement, generative AI in InsurTech, and women in InsurTech. So head over to insurtechdigital.com, where you can get your free pass to join us on the 18th to 19th of October. Or for the chance to showcase your products and services to partners and customers alike, you can sign up to become a sponsor. However, InsurTech Live is not the only thing to look forward to later this year, as we also have our FinTech Live London show coming your way in November. Alex, what can you tell us about that one?
Yes, our hybrid event, FinTech Live London, is returning this November in a brand new venue. That's easy for me to say. We'll be at the QE2 Centre in the heart of Westminster from the 8th to the 9th of November, bringing you more excellent insights into the worlds of FinTech and InsurTech, and giving you more opportunities to network with like-minded professionals, investors, and entrepreneurs. Last year's event in Greenwich was incredibly well attended, and we're expecting this year's FinTech Live London to be even bigger, with 5,000 attendees, 2,500 virtual streams, and 60 keynote speakers. So come and be part of the action down in London and join the likes of Oracle, WorldPay, Marsh, Starling Bank, HSBC, and ABN AMRO, who will all be in attendance. It's not too late to sign up, or even, as Lewis says, become a sponsor and get your name in front of thousands of visitors. Just visit live.fintechmagazine.com. And so, finally, Lewis, have you got the results of our LinkedIn poll for us?
I do indeed, Alex. So earlier on, we asked, will financial service providers leverage blockchain to store and access quality data for building better AI tools? The options were A, yes, data is still very siloed. No, fintechs or financial service providers won't want to build AI tools from data on public ledgers. Or C, unsure, it depends on the financial service provider in question. So we have the answers in now. 52% of you said A, yes. Financial service providers will leverage blockchain to store and access better quality data for AI tools. 20% said no, that fintechs won't be doing that. And 28% of you were unsure. So we have our answers there.
Okay, thank you very much. Some very interesting results. Thank you to everyone who voted on that one. If you haven't done so already, you can still add your voice to that conversation. We'll leave the poll open for a few more days still to come. Unfortunately, that's all we've got time for this month's FinTech Magazine Show live on LinkedIn. Thank you to our fabulous production team for keeping us on the rails as ever. Thank you to Alistair Brown as well for joining us live earlier. And thank you to Lewis too for co-hosting today's show with me. And most importantly, thank you to you for watching and taking part. We'll be back in August to bring you more FinTech and InsurTech news and insights. Have a fantastic weekend, whatever you're up to, and goodbye.